It's HB Punch and Profit. We had 3 setups today. I'm going to break them down real quick. The live execution will be with links in the description below, and y'all can check that out. But I'm not going to do an individual breakdown of each setup. We're just going to do it all in one video, all 3 setups in one video. Just to keep things simple. And I just want to check something real quick from this inversion. Okay, not quite. So 50 points will be around there. Our take profit was originally right here, so we did hit the target. I got out of that trade early, but there's a good chance this thing will probably hit 50 points. But anyhow, setup 1, setup 2, setup 3. Okay, now if you are very rigid and unflexible in your trading, you're taking a beating today with the signals I give you. On an ordinary day, right, you get your signals, you can take a buy or a sell. You're looking for buys and sells, right? But this is not an ordinary day. This is not an ordinary week. So what you have to do is be flexible, and you have to not fight against the trend. Go with the flow. Okay, wherever the river is going to take you, it's taking you there. Don't try to swim against it. Okay, I actually took a loss inside here, right here. I got a sell signal. I took it, and I got stopped out. No big deal. I didn't over leverage. That's why you don't over leverage. So what did I do? I remembered, oh yeah, it's election week. I thought we would be over this by today, but we're not. If you look at the news, what do we have here? Wall Street extends rally from Trump victory. Wall Street extends rally from Trump victory. U.S. retail traders to stock markets, and there's a bunch of headlines that keep repeating that type of sentiment. So we know this thing wants to go to the moon because Donald Trump won the election, and it's an election week. So since we took a loss right here, now my mindset is okay, we're not going to get that A plus setup, even though the market's moving up to sell for 50 points or 100 points. We're not going to get that. Okay, it's okay. So what I'm going to do, I'm going to align myself with where this thing wants to go. It wants to go up. So what I'll do, I get another sell signal here. In each of these orange boxes, there's sell signals, right? I'm not going to take the sell. I'm looking for a buy. What I'm going to do is use this to help me build my narrative and trade and find my entry and stop loss and manage those things. So we get a sell signal. Nope, I'm not going to take it. I'm going to wait. I get confirmation that this market's probably going to continue to push up. Why? Because we're chopping. We're not getting that smooth liquidity run to the downside. We're chopping in this range. If we're going to chop in this range, I'm going to put myself in the direction of the higher time frame and look for a buy. We get a bullish inversion, bearish fair value gap, bullish fair value gap, inverts it. This is where we enter. Okay, where does my stop loss go? Well, initially what we do is we take it from the inversion sell signal and we go down 25 points if it's at the bottom of the range. It's right here. Okay, when you get that advanced market structure shift over the yellow line, that's when you can move your stop up to the most recent low. So this inversion sell signal happens at the low of the range, and you will know it's the low of the range once we start chopping up inside, up and down in it. Okay, so that's setup 1. You take your profit at the candle high or the wick high, or you run it for 50 points, which it hits easy. Okay, for me, I went to the candle body highs. I played it safe. Setup 2. Okay, same thing. We get a sell signal. Happens at the low of the range. Okay, we start coming down. We take out the high, and then guess what? We create this bullish fair value gap in this purple range. So what do? I measure out that inversion, 25 points for the sell signal. Originally my stop is down here. We create this bullish inversion. I'm looking for buys. We have this advanced market structure shift that we close over, so I pull my stop up. Boom. And we go 50 points, or we hit the high again. Same thing here. Inversion, only notice this inversion happens at like a premium, or it happens at the high of the range. So what we do, I'm going to pay attention to how the market reacts. Do we storm down? No, we do not storm down. We do the same thing. We kind of sit here and chop up and down, high resistance. So I'm going to measure out 50 points because this happens at a premium or a discount, whichever one. It doesn't really matter. So my stop is right here. Now I'm waiting for our buy signal. We don't get a buy signal. okay, till here. We have a bullish inversion, right? We have it 50 points down here. Okay, we get the buy signal, we enter. Okay, it chops up and down. Okay, and we actually get another buy signal. And you can handle this if you're not over leveraging. You can handle this move down. Look, we're about to hit our 50 points here. We can handle this move down if we do not over leverage. If you over leverage, you're done. I'm sorry. I mean, I don't care what strategy you have, you're screwed. But we put our stop at 50 points. Okay, now we notice right here that we come down lower. Always remember that it's going to be one tap to the top, two tap to the top, three tap to the top, or one tap to the bottom, two tap to the bottom, three tap to the bottom. Okay, then the move is going to happen to the higher time frame trend. Usually on that third tap that's going against the higher time frame trend, it's going to expand out slightly more outside of all the lows within that range. Okay, and then, which it did here, we create a bullish inversion over the bearish one. We have an advanced market structure shift. The candle body closes above it. We raise our stop to the most recent high. We run it for 50 points, which would have been here, but I ran it to this high, which was like 25 points. So ultimately, I made like 75 points because I played it extraordinarily safe. And I made like what, about $500 on each funded account. That, how many people make that in a day? Over $1,000 in a day. So instead of trying to aim for 150 point targets, 200 point targets, why don't you just be modest, okay, and take your small little targets, because the setup will present itself if you have the flexibility and you use some logic and you're not banging your head against the locker because you just see the signal anywhere and you just take the trade. Use some logic. On a normal ordinary day you can do that, but even on normal ordinary days you're going to have the ability to identify when the market just wants to chop, and it's not going to give you that smooth price action, right? When the market wants to chop in certain ranges, okay, put yourself in the direction of then you're gonna cut down your options. Okay, I'm only looking for buys today, I'm only looking for sells today. Okay, in this case it was buys. All right, I'm gonna look for buys, same signals, you just replace one confluence. When we come down here, we're not tapping into a higher time frame PD array or yesterday's low or weekly low. Same here. You're not tapping into a higher time frame PD array. Same right here. You're not tapping into a higher time frame PD array or weekly low or prior day low. But you do have this major news event where Trump has won the election and the market wants to go to the moon. That is your high time frame replacement PD rate. Then you can look for the rest of the signals: inversion, advanced market structure shift. Okay, take your 50 points, which would have worked out on any of these three setups. Bada boom, bada bang. What a great day of trading. Okay, easy money. Be flexible, like fighters, like a boxer. You cannot be one dimensional and expect that every opponent that you go against is going to be easy and you're going to be able to do the same things. You have to be able to adapt and adjust to your opponent. Okay, the market is not going to give you the same A plus setup every day. And either, if you want to look for that A plus setup, you're going to have to sit on your hands a lot. You're going to have to miss trading days, and that's fine. That can be a very profitable approach. But if you're going to participate every day or most days than not, then you must learn how to adjust and adapt in those circumstances and look for your setup. Even though it's not going to look A plus, it's not going to look clean. Okay, you know, I got knocked down right here. I get back up, I make an adjustment. I notice that my opponent doesn't like when I pressure him and put him on his back foot. So I said, okay, I'm gonna put some pressure on him. I can do that. I know how to fight like that because I train that way. Okay, so I start putting pressure on his ass. Okay, and then boom, I'm beating him down. Boom, catch him with a body shot, put him down. Boom, right here, get the knockout. Successful day of trading. This is Havoc, Punch and Profit. Get at me, like the video, comment down below, subscribe. If you want to see the live executions, go down below, look in the description. Peace.